QuickBooks Pro Plus Desktop 2022 Pay Bills Form, check. Get ready because it's go time with QuickBooks Online 2022. Here we are online in our browser searching for the QuickBooks Online test drive. We're going to be locating the test drive. We're going to verify that we are not a robot and continue. Little do they know that I'm sitting here with C3PO. But in any case, we're now in the Craig's Design and Landscaping. I'm going to hold down Control, scroll up a little bit to get to that 125%. We're also opening up the version that we got from the free 30-day trial that has the business layout on the left-hand side as well. Going back to the landscaping. So back to the landscaping in a prior presentation. If I hit the drop down in the new button, we talked about the entering of the bill. The next natural step would be to pay the bill. So just a quick recap, remember that if we enter a bill, the bill form means specifically that there's going to be an increase to the accounts payable. We would only be entering a bill form if we're on an accrual basis. If we were not on an accrual basis, when we receive an actual bill, not the bill form, but a bill for goods and services that we have received, then we could pay it with an expense form or a check form. These two forms decreasing the checking accounts directly. The bill form, meaning more specifically bill form, means that the accounts payable is going to be going up. Once we've entered the bill form, the next natural step is that we're going to have to pay it at one point in time. We're going to pay the bill. This will be the next form. That's going to be decreasing the accounts payable. The other side, decreasing the checking account. It's just the same kind of form type as a check or expense, except for the fact that it's specifically saying the other side is going to be a decrease to the accounts payable as opposed to a check and an expense type form, which are decreases to the checking account, but we're going to be assigning some other transaction, some other side there, as opposed to the other side directly going to the accounts payable. So let's open up our balance sheet and our income statement. This is going to be our standard type of practice. I'm going to duplicate the tabs up top, go into the tab up top, right-clicking on it, duplicating it as that is thinking. I'm going to go to the tab to the left, right-click on it again, duplicate again. Now I'm going to go to the tab in the middle. This is where I like to see my balance sheet. So I'm going to scroll down to the balance sheet, go down to the reports, and then we are in the reports. We're in the standard area. I'm going to scroll down to the reports, and this will always be in the favorites because these are our two favorite reports, balance sheet and the income statement. I'm going to change the date range up top by going from 01/01/21 to, I hit tab, 12/31/21, and then tab. Then I'm going to run that report to refresh the dates. So there it is down there. If I'm going to go to the next tab to the right, and we're going to go to the reports again. So we're going to go to the left-hand side, down to the reports, open up our other favorite report, that being the income statement. Scrolling down, finding the income statement, otherwise known as the profit and loss or the P&L, changing the date range up top from 01/01/21 to 12/31/21. Run that report. So there we have the income statement. We're going to go back to the balance sheet, and we're focused now on the accounts payable. So recall that last time when we entered the information, that's when we impacted the income statement because we entered something that might have an impact on the expense, and then the accounts payable went up. Now we're going to decrease the accounts payable, and we're going to record the other side is going to go to the checking account. I'm going to hold Control down and scroll up a little bit. I'm going to close the hamburger up top. So the checking account's going to be going down, and the accounts payable is going to be going down below. Now note, you might be thinking, well, if the checking account's going down, isn't that when I record an expense? Not if you're using an accrual component, which the accounts payable is. If you're using accounts payable, you've added in an accrual component. That means that we recorded the expense not at the point in time that we actually pay something out of the checking account, but at the point in time that we enter the bill into the system. Now that we're paying the bill, no impact on the income statement. So then we're going to go back to the first tab. Now there's a couple different ways we can track this accounts payable to know which bills that we need to pay. So I'm going to go back to the left-hand side, hold down Control, scroll back down to that 125%. One way would be to go into the Vendor Center or the Expenses tab, and we can track by the open item. So I've got the expenses up top. I can filter then here. I can filter by the open items, by the bills, and then possibly by the bills that are open or overdue. And that'll give us one indication of the bills that need to be paid with the pay bill form typically. And the other way we could do it is we might go to the vendors tab on the right hand side, and we might then sort the vendors with our little filters up top by the open bills here. That also gives us the open bills that we need to actually pay. The other way we can do it, I'm going to make another tab to do this. I'm going to right click on this tab and duplicate this tab. We can go directly into the pay bill item with the plus button up top, and then we could go into the bill, and then the pay bill is right underneath it. This doesn't look like a normal form. It doesn't look like a check form here because it's giving you another kind of sort layout that we can basically sort the bills that are outstanding and then pay those bills. So we can pay them with an account up top. Right now they've got the MasterCard. We might pay typically with a checking account. And then we got the payment date, which is typically going to default to the current date. The starting check number, if there are check numbers, if they're not actual checks and you're paying electronically, then you could remove the check number here. If you're going to be printing these bills, you could tick off multiple bills at one point in time. Then you would have the physical checks that would be outside, or you'd purchase them separately. You would have to then put into the printer and print to those checks. Then we have the detail down below, sorting. We could sort by the payee. By clicking here, we could sort by the due date. We could sort by the open balance and so on. And then we have our filtering options here. So we could have the due date. We have the periods that are here, and then we can sort in more in depth with the filters by the payee, which might be more useful, of course, if we had a lot of bills that would be outstanding. Obviously, the larger the company is, the more that this accounts payable feature, the more sorting is going to be there, and the more you're going to be focused in on the cash management strategies. You can then sort and pick multiple bills, or you can pick all the bills by clicking this item up top, which would select all of the items. And then you have the option down here, once they have been selected, to save it, save and print, if you're going to be printing them to actual checks, or save and close it. Now, once we enter these items, I'm going to close this back out, or let's keep it open. And if I then go and I deconstruct some of these bills, let's imagine that we had the pay bill. What's the pay bill going to do? A pay bill means it's going to make multiple forms, because we could make multiple of these forms at the same time. It's going to decrease the checking account, and the other side's going to go to accounts payable. Those are the two accounts impacted. Let's go then to our Craig's Design and Landscaping on the balance sheet. I'm going to hold Control down, scroll up a little bit. We're in the accounts payable. If I go into the accounts payable, now we're at the end, the end document that's being created. We're drilling back down, clicking on it, taking us to, in essence, the general ledger, holding Control, scrolling back down so I could see the balances on the right-hand side. Notice the only accounts or the only transaction type forms, the form types that are in here are bills to increase it, check forms to decrease it. If I go into this check form, I do not go into something that looks like what we saw on the left-hand side specifically. It might look a little bit different over here if I go onto the right-hand side, because it looks something more like a check type of form, which would be the form that decreases the checking account, because it is, in essence, a check type of form, except that on the bottom here, instead of having the expense category or the account that we would be affecting, it's checking off the bill that's going to be impacted. So we've got the payee here, we've got the checking account that's going to decrease the checking account, the mailing address, and so on, and then the amount, and then we're checking out the bill that it's being applied to. Now, if I click on this bill, it'll actually take me to the bill that was the source document. So when I go to the actual bill, this is showing us the expense account that actually was impacted. It also shows that the bill has been paid up top. So notice that if you have an accounting kind of background, you can think about this from the accounts that are impacted. But when you take it a level further for the accounting process within an accounting department, accounting system, we would like to be able to track these bills and be able to see an indication that the bill has been paid, bill has not been paid, in addition to the detail and the transactions that are going to be made to build the financial statements. So, and that's one reason why, if you have an accounting background, you start to think about things in terms of debits and credits, and you might want to do things with journal entries. You might say, hey, these forms are not transparent enough. I have to kind of know what this form is doing. It's not telling me which accounts are debited and credited specifically. I have to know that the bill form is increasing the accounts payable and the other side is going over here. That's harder than just entering a journal entry if I know debits and credits. But you want to use these forms because you get that added level. It forces you, for example, to have the subsidiary ledger broken out by forcing you to add a vendor. It also ties out the forms so that we can sort by the forms that have been paid or not paid, linking the form to the pay formed item. So if I close this back out, we're back to then our transaction detail. I'm going to scroll back to the right. I'm going to go back to my prior report, not by hitting the back button up here, but by hitting this back to report item. I'm inside of the website as I'm doing my navigation. That takes us to our accounts payable here. Now the other side is up here on the balance sheet. So if I go up to the checking account, and we're basically just writing a check. We could have written multiple checks. If I go into that account, then we're into what I would call the general ledger because it's sorting out the information by date. They call it the transaction detail or the transaction report. Gives you a little bit more detail with the transaction types and so on and so forth. Now the checking account is going to have more kind of stuff in it, more transaction type forms than any other item because the checking account is the lifeblood of the company. It's involved in the vendor cycle, the revenue cycle, and the employee cycle. But if we scroll down here and we say, okay, I'm looking for a pay bill type of form, there's one. There's a pay bill type of form. It's decreasing. So if I go into that, I know what I'm going to see. I'm going to see, in essence, a check kind of form, decreasing the checking account because we're in the checking account. And the other side is going to be connected to a bill as opposed to going to an expense down here. If I want to know the expense that was ultimately impacted, I can then link to the bill, which shows that it was paid by that bill form. And they put it to miscellaneous expense down below. Miscellaneous something. Is it an expense form? Yeah, other expense. So if I close this back out, so now I'm back in this report. I'm going to go back to the prior. Well, let's also take a look at a normal check. So notice this is a bill check form. Let's compare that to like a normal check form. Drilling down on a check form, it also decreasing the checking account. It's going to look similar up top. It's decreasing the checking account. But down below, instead of having it tick and tie out to a bill form, you have it tying out to an actual expense down below because we're expensing the actual category instead of us paying off a bill that we had entered in the past. So in other words, if this had going through the bill kind of situation, you would have entered the bill that would have increased the accounts payable and recorded to this automobile fuel expense. And then we would have paid it with the pay bill, decreasing the accounts payable and decreasing the checking account. Instead, we got the bill and paid it directly with basically a check, which decreased the checking account directly, and it went to the expense account, bypassing the accrual component of the accounts payable. So if I close that back out, the expense form is kind of the same thing. We'll talk about this form later, but that's also a check type of form, in essence, without a check number, because possibly it's from an electronic transfer. So you got the same kind of thing. It's decreasing the checking account, looks very similar. It's not going through accounts payable, so at the bottom here, it's going to just basically a account on down below. Closing this back out, and of course, all this detail with the pay bills, you can also check once it has been paid by going to the vendor center in the first tab, and then you can look at the vendor details. So once these bills have been paid, you can go into the particular vendor for the person that you have paid, and you'll find, the bill and the pay bill. Again, that more detailed type of transaction here. You can hide this on the left-hand side, and you can hide this caret on the left-hand side as you're going into these items. So just getting used to the navigation that you're going to be using here. You can hide that. I can open this back up, and then when I want to go back to the prior screen, I'm going to use this item. I'm going to really not go up to this browser tab. I'm going to be using the internal functions of the website and go back here. If I want to open up the hamburger, I can go back up top. Now, the other place that you're going to see this detail when you do the pay bill, the other way you can see kind of this information down below is by having the report. So I'm going to go to the vendors section, and just so I have another tab, I'm going to close this out. And do you want to leave without saving? Yes, I do. And this time, let's go to the reports. And we saw that we have all these reports that are going to be supplemental to basically the accounts payable. That's going to be people that you owe. So we got who owes you. That's kind of like the accounts receivable. And then the sales, and then what you owe. That's kind of the accounts payable. And we'll get into these reports later, but the most basic one is like the vendor balance detail and the vendor balance summary. Let's get into the vendor balance detail. And let's close the hamburger. I'm going to make the date range, custom date range, to end on 12/31/21 and run it. Hold control. I'm scrolling up a little bit. So now we see this information, and you can see kind of the detail of the bill that has been paid. Now, these are the outstanding ones, the bills that have not yet been paid. If I want to see the activity that has been paid as well, I can go up top and say, look, I want to customize this report. We'll get into more of this later, but we can go down here and say, I'd like to customize this, and I want to see AP paid information here as well. So we'll move that up and say, run it. And so now we've got our bill information. Hold on a second. Let me do that again. Customize. We've got the AP paid now included, but I only got the unpaid. So I'm going to hit the drop down, and I want to see all items and then run the report. So now we've got the activity, and this is what you would expect to see by vendor, the bill going up, and then it's paid. That's what you expect to see. It's easier to see here on a vendor by vendor transaction. You enter the bill, then you paid the bill. So we got the bill, we got to enter a bill, we paid the bill, still owe that $241.23. Here we've got two bills, entered a bill, paid the bill, back on down to zero. So that's the activity that you would expect to see. You only got the two types of forms basically in the accounts payable, and it's easier to tick and tie out the activity of entering the bill and paying the bill when you're looking at the ledger that's breaking out by vendor, as opposed to the full accounts payable, which has the same kind of thing, but that has all the activity in it. So that's going to be the pay bill form, and we'll continue on with the next kind of forms in future presentations.